How's it, guys, and welcome back to Paradime Flip and a new trade video. Hope you're all doing well. This is going to be part 1 of a 3-part trade series based around market traps and trap traders. As usual, without wasting any time, we're going to get straight into it. And there are 2 main types of trap traders. And in the first part of this video series, we're going to be talking about momentum or trend traps. Now, traps are very important because they help us determine several things. And one of the things they help us determine is trade location, right? So that's going to be where to enter. And another thing that understanding trap traders is going to give us is direction. And basically, these elements, right, fulfill certain criteria, right, that basically give you a trade setup. So if we understand trap traders, where traders are trapped, and if we understand how to take advantage of them, we are never going to be short of trade setups, okay? Because wherever there are trap traders, we're going to be able to determine the trade. And that's basically why it's important. And it's also going to fulfill your strategy criteria based on entry and direction. So when we're looking at trap traders, what we basically want to understand is where traders are in pain, because we want to take advantage of the pain and the fear within the market. Now, how does that look like? If I just draw simple market structure, okay, and we take a look at a simple trend of making lower lows and higher lows, right? In this downtrend, right, it's going to be obvious that traders are going to be looking to sell to go with the direction of the trend, right? Now, obviously, as the title is Trap Traders, Momentum, and Trend Traps, right, we are going to be taking a look at when momentum or trend traders are trapped. And that basically occurs, right, at the point where price breaks a low, right? And once price breaks a low, this is a decision point for traders. There is going to be an influx of selling coming in, whether it be through the means of stops being triggered, breakout traders entering, right? It doesn't matter, okay? As soon as price breaks the low, there's going to be an influx of selling. This is going to be an opportunity for buyers to enter their position, right? Because there's going to be a lot of selling liquidity at the point of the break of a previous swing low, right? And if there is no buying interest, right, then price will most likely continue lower, okay? But if there is buying interest, right, this will be the perfect location for buyers to accumulate any buy positions, right? So if traders want to trade long, right, this will be a perfect area for them to enter those positions, as the sellers coming in provide liquidity for them to buy up. Now, at this point, traders are not trapped. So at which point are traders trapped, right? Traders are going to be trapped when price trades back into the previous range, okay, from this low to this high. At this point, any traders who have sold at the breakout, right, or any traders who have accumulated a short position within this balance area, right, are going to be trapped when price comes back into the range. Now, if you noticed, I mentioned that any traders who have accumulated in this balance area. Now, I just want to explain that a bit quickly, right? If we understand a balance area, right, all a balance area is two-way money, okay? Now, if the trend is going lower, right, there will be a lot of traders accumulating sell positions within this balance area, right? So throughout this balance area, we'll find sellers, right? And it's not at one point, right, Because remember, any institution or large fund, right, that has enough money to drive price, okay, is not going to have a small position or a small one lot at the top edge or somewhere in the middle. They're going to have to accumulate a large position size. So they're going to have entries within this area and they'll be holding on that. And they basically have to average in to their position to fill their full position size, right? So they are basically going to have an average of their total position size, right? And that's usually the 50% of the balance area. So when price breaks this low, right, these traders are making money, right? And when price starts to break back in, right, into the range, all these sellers are now under pressure, right, at that point. Okay, so by understanding that, right, we know that anyone accumulating inside this pullback, right, is also trapped or under pressure when price trades back into the range, right? And this is where the fear and the pain comes in, right? It's because when these guys have fear or are under pressure, right, when they feel pain, we can take advantage of that. And to understand that, we need to think a little bit about how these traders react or are thinking in this kind of scenario. Okay. And basically, if they end up with price all the way above the accumulation point, right, they're going to be in deep drawdown and they don't want that. Okay. So they have to make a decision now, right? Are they going to hold and hope their price trades lower, right? Or are they going to have to exit their sell positions, right? And it's when these guys unwind all their sell positions that creates an expansion higher, right? Because when these guys unwind their sell positions, they are basically buying, and that influx of buying is going to drive price higher. Okay. And by understanding when these guys are under pressure, right, we want to be trading in that location where they are most likely going to give up or capitulate or unwind their position, right? We want to take advantage of that. So we basically want to take advantage of traders under pressure or traders who have fear. Okay. Now, once price breaks above the high, you'll usually see sellers coming in, right? Trying to defend that position. Okay. And basically, this may cause price to rotate a little bit. Okay. And what we want to see is that buyers come in underneath price to support price. Okay. So what you'll end up getting is a bit of a range in this area. And that's what you want to see. Okay. Basically, what's happening is that every time selling comes in, you have buyers absorbing all the sellers. So these buyers coming in below the price, right, are basically taking the other side of these sell positions, right? And if you think about what a range is, all a range is two-way money. So when you have a range, you basically have sellers at the top and buyers at the bottom, right? It's two-way money, right? It's a price that traders agree on, okay? And it's basically buying and selling at this price, okay? Now, if these sellers, if these buyers were not here, right, the price would drop, okay? So this two-way money is very important in understanding trap traders, okay? Because it's when these guys come in and hold price or absorb any new selling coming in, right, that we know that, okay, these sellers are most likely going to capitulate. And that's because if these guys are selling and they realize that every time they sell, their position is getting taken, right, by a buyer, they're going to realize that they cannot push price lower. And that's going to tell them, it's going to signal to them that there are buyers absorbing their sell positions or there are buyers at higher prices now. And basically, this is going to give them the incentive to capitulate or to unwind their position, right? Because they cannot push price lower. So they have a decision to make, right? And that's either hope that these buyers go away, right? And price falls through, or they risk price being all the way above their position, right? And them being in a heavy drawdown, right? And the decision is not that difficult to make, okay? And it's better for them to unwind their position, okay? And basically, that unwind of the selling, as I said previously, is going to drive price higher, right? And when that price drives higher, you want to be involved in that move, okay? And that's basically a momentum or a trend trap, right, when trend traders or momentum traders get trapped in the market. Okay, and that's how you'd take advantage of it. You'd want to see a rejection of a low. You would want to see price trading back within the range, and then you want to see that consolidation that lets you know, or that hold that lets you know that we have buyers supporting price. Now, these trades, right, are going to be best taken at a strong level, right? Whenever we get into a strong level, whatever level it may be, okay, right, you're going to want to look for these trap traders. Now, you don't want to pick the bottom. So, although I explained this to you, you do not want to trade these traps, right? Especially when you're first starting off trading, right? These traps are going to be very hard. And why that's the case is if you just think of a normal trend, okay? So if I just go to my right here and I just drew a normal trend here for you guys to explain this point, okay? When you do get that trapped trader, or those trap traders at higher prices, right? And we do get the reversal, okay? If you think about it, this is only going to happen once, right? So this is only going to happen once, okay? And you can literally keep trying to fade the top, right? Try to find the top of the market, right? Those are terrible circles, right? If you keep on trying to find this trap, right, you can fade the top multiple times and get stopped out multiple times until eventually you actually catch the turning point, right? And that is not a good strategy. Okay, so I'm going to show you a better way, right, to use these traps. Now, how do we do that? Basically, what you want, right, is once the low has formed, okay, and we get a move higher, okay, at this point, the trend may or may not have reversed, okay, because once we take out this high or get close to this high, we could simply go in a range, right? And this could be a larger accumulation for lower prices, right? So we don't want to assume that we know where the bottom is going to form in a market, right? Rather, what is more effective, right, is once we have a clear sign that the trend has reversed, or once we have traded above this balance area, right, and we start to form a new balance area at higher prices, this lets us know that we have a trend change. And this is because we now have buyers coming in at higher prices, holding price higher. So we can assume their price can continue higher, right? Any sellers, right, coming in this balance area are now gone once we have traded above it, right? And if we do not reject the balance area, but rather trade above it and start to build volume or hold higher, we know or we can assume that price will most likely continue higher, right? So this lets us know that we now have a trend change. And what you want to be looking for is the trapped trader or trapped traders in the direction of the trend, right? And this is basically what you're going to be looking for a higher probability setup, because you have the direction of the trend, right? So you know that most likely we can get a move or continuation higher, right? And also you have the entry location, right, based on the market trap, right? And you'll find that if you stick to that, you'll be more successful in your trading than trying to find the bottom, right? This is a no-no, okay? You get a lot of traders that show you entries where they picked the perfect top and the perfect bottom, but how many trades did they lose before they ended up actually picking the top and the bottom, okay? Now, you just need to keep that in mind, okay? So it's better to trade with the trend always, okay? And these trap traders are going to be more effective. Now, one more thing that you should be aware of is that whenever we have trap traders, right, so we trade below a low and we get a rejection, right, and we come back within the range, okay, it's very possible for price to trade below the previous low again and form another rejection, right? And this could keep going on, right, up until whoever is accumulating has finished accumulating their position. So basically, what these are accumulations of longs, right? And whoever is accumulating is letting price go lower so they can give the illusion of a downtrend, so that sellers still think their price is going lower, right? And continue selling. And buyers are basically going to take the other side, right, of their position because they have the illusion that the trend is still lower, right? But every time price takes out a low, we get that rejection. And every time price takes out a low, we get that rejection. Okay? And this is another reason why you don't want to try and pick tops and bottoms, is because you can fall victim to this game. Okay? And it's more effective for you to wait till price is marked up and you have a clear view that, okay, this might have been an accumulation and we may have a bottom, right? Seeing that we have now a volatility expansion or a strong move away from this area, okay, away from these rejected prices. And from this point, what you're going to want to look for is price basically holding or consolidating in this area. And you are basically going to look for price to take out a low on the pullback, right? And we're going to wait for a rejection and we're going to wait for a hold. And you will know that anyone selling in this area, right, is now under pressure and will most likely capitulate. Okay, so you have the entry set up, right, based on the trap traders, and you also have the direction of the trend within your favor, and that's going to give you a confluence of factors, right, that are going to put probabilities more in your favor, right, for you to get that move that you're initially looking for. So what we can actually do is go into price and have a look at these concepts and see how they play out on the chart. Okay, so we are here on Euro USD on a 1 hour chart, and you'll notice that I have a level drawn up, and basically this level is the parity level. Now, we haven't reached parity in quite a while, many years, about 20 years, and basically parity is the level where euro and the US dollar is 1-to-1, right? So this is a really major level, and you'll also notice that price had a strong move or a strong run lower, right? So this suggests to me that we can expect or anticipate a pullback, right? And that in confluence with a very strong support level, right, being this parity level, right, we can anticipate a reversal at this level. So it is at this level, right, that we can expect or anticipate a trap to occur, right, and have a high probability of being right. Now, if we just zoom into this area, right, what you'll notice is that price has been trading lower and we reached the level, and you'll notice that we had a consolidation at the level, okay, and we traded below the level, okay. Now at this point, okay, there is an influx of selling occurring, okay, in this area, right, and we see a sharp rejection, right, which lets us know that there's exhaustion or a lack of selling or an influx of buying below this price level, right? And once we reject this level, notice how we consolidate, right? And this consolidation is caused by sellers coming in, okay, either trying to push price lower to continue the trend, right? Or to defend any positions that were accumulated within this balance area, okay? And once we get the selling coming in, what you'll notice is that buyers come in right under them, okay? So all these sellers, right, that are trying to push price lower are being absorbed in this area, right, by buyers at higher prices, right? Now, it's at this point that any traders or any sellers operating within this region are now trapped, Okay, and it's in this area, right, where you want to be trying to take advantage of that, right? Because when these traders give up, right, they're buying, or they are the unwind of their sell positions, right? All these guys here, right? The unwind of their sell position is gonna be the catalyst that drives price higher. Now, I actually call this trade, right, in my Telegram group chat. You can join it. The link is in the description, and it's completely free of charge. Okay, so you can go and check it out if you want. Now, I call this trade there, and it's actually played out quite well. Okay, and this is basically what you're looking for in a trap. Now, I just want to go on a lower time frame and show you guys what we're looking for inside this area. Okay, because this is the ideal entry location for you to take a trade, right? To take advantage of such a trade. Okay, so what we're going to do is we're going to go down to a 15-minute chart. Right, and have a look at what's happening in this area. Now, you'll notice, right, that once we get this trap, we get a strong move up. So your first instinct is to draw your fibs, right, over this area. Now, if you don't know what I'm talking about, you can go and watch my previous video. I'm going to link it on top, right? And I suggest you go and watch that so you have an understanding about what I'm talking about here, right? So you're going to draw your fib, right? And you're going to measure that 50% location, okay? And I'll just change that color to green so we can see it clearly, right? Okay. And what we want to see is price pulling back. And if we trade below the area, we want to see the rejection of that 50 area. Okay. And the next thing you can do is after you draw your fib on the major impulse leg, right? Once you get this pullback, right, and we get that rejection, right? Now you have a new swing high and a new swing low. Okay. Now you're going to want to draw a fib over that area as well. Okay. So you're going to take your fib tool and you're going to draw it over that area. And you're also going to want to mark up the 50% of that swing, okay, which is this area. Now, we do not want to see price consolidating below this area here, right? If we see price consolidating below this 50 area, we can assume that price is going to take out that low, okay, and possibly go lower, right? Or we could take out that low and then reject, right, and hold above and continue trading higher. When we're looking at this 50 area, right, from this swing high to this swing low, as long as price does not consolidate below this area, right, and as long as we hold above this area, we can assume we're going to take this high, right? And that's indeed what happens, right? You can see we trade back to the 50 and we basically bounce on it, right? And you'll notice that we take out the low, right? So we get basically that ABC look, right? And we get that rejection, right? And notice how we hold in this area, right? We basically get another A, B, C move, and then we get that rejection of this low. Now, that is the ideal entry. Now, you'll notice what is happening in this area, right? Based on this consolidation is exactly what's happening based on the larger consolidation, right? That's exactly the same thing that's happening in this area, right? So basically what you have is a fractal situation whereby you have a consolidation, right? We trade below a low and we get that rejection and we get a consolidation, right? And we trade below that low and then we get a rejection and we get the same thing in that area as well. Okay. And that's basically what you're looking for to time the entry. Okay. And this is the ideal location. Now, I didn't get this exact location because I came late to the chart. I had to opt for another entry, right? And I managed to get the entry here. And I was basically targeting this previous high and we reached that target today. Okay. Now, you don't have to get this entry. Okay. Once you have your setup framed and the trend is going in your direction, you'll be looking for market traps in the direction of the trend, right? So we get such a trap here, right? You can see we form this low, right, after breaking out of this area, okay? And as long as we are above, if I just take off all this drawing, right, as long as we are above the 50% of this balance area, okay, right? We can opt to go for longs, okay? So we break out, we got a support area here, we trade into it once, we reject, we trade a bit higher, and we trade into it again, right? Giving us that ABC, just a different shape, okay, right? That's basically what you're looking at, and you get that rejection, and that's basically what you're looking for, right? And you'll be looking to go long. Now, nowhere else do you get that besides here, right? Today, right? During the open, you actually got another setup, right? If we just measure this balance area, right? If you have watched my previous videos, you will learn that when you get close to a previous high, right, we can expect stops to get run. And once we get close to that high, right, we can anticipate that as well. So if you measure your fib from this high down to this low, you'll notice we are well above the 50% of that range, right? So if I just draw a hypothetical 50%, if I just eyeball it, right, around about there, okay? Now, we know at this point we'll be looking to target the high, okay? Once we break out of this balance area, you'll notice that we get a little ABC and a sharp rejection, right, of the previous low, and at that point, you'll be looking to trade higher, okay? And usually, I'll take the 50% of the previous consolidation, and oftentimes you'll find this level is the level that holds. So you'll find very often that when we have a consolidation and we break out, if you measure this consolidation, right, it's in this area, right, that you'll find your buy position between the 50 and the high of the previous consolidation. You'll find a buy trade in that area, right? So that's where you'll be looking to go long, right? And that's basically the setup. So it's the trapped traders in the direction of the trend, right, that'll be giving you your most probable setups, right? If you are doing it counter trend, you want to make sure you are at a very strong level of support, right, or resistance, right, in order for your trade to be a higher probability setup. Now, this specific trade had multiple confluences, being that we had a very strong level, right, and also price was overextended, so we could expect a pullback, okay, at that point, because it's not going to keep dropping forever. At some point, anyone in those shorts are going to take profit, right, and there's going to be stupid traders at the bottom still looking to trade the trend, and they're going to get trapped, and these are the ones that got trapped in this location, okay. And basically, that's how you trade momentum or trend traps, right? That's when momentum or trend traders get trapped. And in my next video, we're going to be talking about a more unique kind of trap, a trap that is basically not very spoken of. And together, these two types of market traps will give you a multitude of setups that you can actually get involved in on a daily basis. Okay, so if you liked this video, I would appreciate it if you hit the like button. And if you learned something and you find that my videos add value to your trading, please subscribe. And if you're looking for a community, I'm trying to build a community of traders that I can teach for free. I don't sell mentorship or anything. This is my passion. And if you are struggling in your trading, you can join my group chat. It's completely free, and I'll be glad to help you out. I really appreciate your time, and thank you for watching this video. And until the next video, have a good day.